Good evening, ladies and gentlemen. Welcome to the fourth episode of 360TF Business Unplugged series. This initiative aims to unite industry leaders from various geographies and sectors to discuss significant topics of concern and importance. Welcome to our exploration of the transformative effects of digitization on trade finance. Today, we explore how digital solutions are reshaping this sector, improving efficiency in financing processes, strengthening compliance measures, and optimizing risk management strategies. We are honored to present a fireside chat featuring two distinguished leaders, Sameer Sehgal, CEO of TradeStream, and Vikram Lodha, co-founder and CEO of 360TF. Join us as we uncover insights into this evolving landscape. Vikram is a seasoned banking professional with over 20 years of experience at Citibank and Kotak Mahindra Bank in India. His expertise spans transaction banking, trade products, and supply chain finance, reflecting a deep understanding of industry dynamics. Vikram's passion for leveraging technology to drive business transformation makes him a pivotal figure in today's discussion and the impact of digitization in trade finance. Without further ado, let's welcome our guest, Mr. Sameer Sehgal, CEO of TradeStream. Sameer is a distinguished leader in global trade finance, renowned for his exceptional career spanning over 21 years at Citi. As a former managing director and regional head of trade, commodity finance, trade finance, and EAF for Europe, Middle East, and Africa, Sameer played a pivotal role in establishing Citi as the largest trade bank in the region. His impressive career includes significant contributions to building the commercial bank and expanding the trade business across India and the Middle East. A graduate of Indian Institute of Technology, IIT Kharagpur, Faculty of Management Studies, Delhi, and the Wharton School, Sami is known for his deep expertise and passion for leveraging innovative solutions in finance. Outside of work, he enjoys literature and is an avid sports enthusiast. Sami resides in London with his wife and three children. With these introductions complete, I would now like to invite our co-founder and chairman, CA Pankaj Mundra. Pankaj has been at the forefront of the trade finance world with over 2 decades of experience in the industry and has been leading 360TF at various funds like BAFT, ITFA, and ICC committees. Over to you, Pankaj, for a few words before we begin this fireside chat.
Happy afternoon and happy morning to everyone. This is a great pleasure to be the episode 4th of Business Unplugged initiative of 360TF. We welcome my friend Sam Sameer from TradeStream, the co-founder and CEO of TradeStream. It's very interesting that literally we met in 2016 when Sam was just going live with TradeStream, the idea of digitizing trade flow, and trade finance documentation. And they have come a long way in last 8 years. I've seen the journey of TradeStream and Sam that today they're a company, as we all are, most of us are from UAE, backed up by EN Capital, the Etisalat Ventures, and of course, large private equity firm from US and UK. But I'm happy to see the response from our clients and patrons, and happy to share that we continue to uh, continue this initiative. We just got back from Korea, from FCI conference, which is Factors Chain International, where 360 was awarded the Best Marketing Award for various initiatives like this. And I'm happy here that we have Sam, who's going to have a fireside chat with my colleague, co-founder, and CEO Vikram. So, Sam, welcome to you, and look forward as we just also as publicly announced our partnership yesterday with TradeStream. I'm sure together both the firms can go miles and digitize the whole trade between the documentation and finance together between UAE, UK, and India, and of course across the globe. So we look forward to this partnership to help clients save, time, money, digitizing the whole trade flow. And together we learn from Sam and Vikram and how we can do this together. Thank you once again, and Sam, welcome to this series of 360 TF.
Thank you. Thank you for inviting us, Pankaj.
Thanks, Pankaj. Samir, once again, welcome to the fourth episode of Business Unplugged. And along with you, I will like to welcome all our participants on the call. I know there are, a lot of well-wishers out there, and our corporates, our banking friends, who know you well, who know us well, and they all are watching us. So we are under a spotlight today. Uh, and as Pankaj was mentioning, how did the transition happen? And Pankaj did meet you in 2016, and how the progress happened. All I can say about you is I had not met you, in 16, 17, but I did come across TradeStream in 18, and I was like so happy to see this as a solution, and my urge to meet you started then. Someone who thought about it. So it was your work that got me to you, more than the person. And when I met you in person, I was equally overwhelmed that you're, and I'm sure the industry speaks about that as well. Very humble person to work with and to speak to. Uh, we couldn't think of anyone more idle than you, who can talk us through what's happening in the trade world. How do you see the industry, and where do we go from here? What all things are there in store for the trade world to look at and to work upon? Because the way I have been seeing some of these things, Samir, when we sit on a dais in a good conference, we speak about multiple things. There are few executions that happen. And one thing that I can speak on behalf of both the firms, we are executing some of those aspects that we speak of when we sit on the dais. And that is what is more exciting than sitting on the dais and speaking about it. So with that, I would, open up the first question to you. How do you see the current landscape of trade finance, and where are we right now?
First of all, before I go into the question, Vikram, I would like to thank you and Pankaj. I've known Pankaj since I think 2007, 2008. In a large measure, the qualities that I hold dear and that we at TradeStream hold dear, humility, hard work, hunger, I see it echoed in 360 TF. And you and I were discussing a few days ago. It's that commonality of character that brings us together, and it's something that we love working with. My apologies to the audience for my snafus in getting on time onto the conference. So my apologies, and please take this as a big sorry for being a few minutes late. To your question about Vikram, about the current landscape. I mean, there's just so much that's happening that's overwhelming, right? That's the word that you use. Tech is pretty much redefining our world, whether it be on the personal side or the professional side. When we started our career, and my career started in the last millennium, internet was not there. It was not as ubiquitous as it is today. Smartphones and devices were not there. In fact, they didn't exist. Data was not as ubiquitous again as it is today. I mean, you can access pretty much anything, anytime, in the matter of seconds. That was not the world that we were living in when we started our trade careers. And knowledge is so much easier to get to. Earlier we had these repositories of knowledge that you had to go to with folded hands. Now it's everywhere. Everybody's got that knowledge, and technology in some form has democratized that knowledge. And therefore, it's also leading to what's happened in various other industries of convergence. So, it's not that the trade industry or the processing industry or the confirmation industry sits in isolation. With technology, you're bringing logistics together, you're bringing payments together, you're bringing FX together, you're bringing insurance together. These are all utilities which existed in silos. Now, with technology, you can actually start linking them, and you can actually close your eyes and see the entire ecosystem coming together, to the extent that if they are all connected, you can actually start using these utilities with the click of a finger. It's amazing. It's almost like a 100-year moment, if you will, that's happening in the trade industry, which has not been digitized, and it's happening right in front of our eyes as we speak every single day. We are stunned with some of the technologies. I mean, what we are seeing with AI and ML, what we are seeing with Gen AI, what we are seeing with simple tools like voice technology, with the efficiencies that it's achieved. Today, we on the operating floor in trade, you do everything by typing in. We've seen so much of improvement by just using voice in the downstream processes. It's not funny. So you talk with your systems and you work on your systems, and both of them interplay to give you a profound difference to what you're doing. So yes, I mean, there's just so much that's happening in the landscape. I mean, I can go on talking for hours and hours, excited by what we're seeing. I think even behaviorally, I mean, Vikram, till a few years back, you would go to the banking customers and corporate customers and say, this is possibly what can happen in trade. Today, they come to us. Literally, we're inundated with questions. I mean, just since the morning today, there have been 2 different use cases that have come to us of what can happen, which will dramatically change 2 different corollaries of trade. And that's happening every single day. So this realization that technology can be a game changer, can be an accelerator, can be a inducer of change, is not just between you, I, a few people in the industry. It's widespread. And I think that change, it's not evolutionary, it's revolutionary. And that's what's happening in the trade industry. So, I mean, we can talk for hours, but you can see I'm like completely charged up with what's happening in the industry. And there couldn't be a better time for a trade professional than now in the trade industry.
I love the last sentence the most, if you ask me. We've had this conversation with a colleague of ours in the past, recent past, and we spoke about trade professionals and where do they see the industry going. I think, and this is exactly what I stated. This is probably the best time to be in trade, and you see the transformation happening again, and at a massive pace. So I'm completely with you on those aspects, Samir. When we look at the integrations happening between multiple silos and now coming out in a common framework, we see this happening, in our scheme of things. We've already integrated FX, we're looking at logistics and insurance now coming together. Yeah, so that's completely echo with you on that side. But with this, I want to first kind of take a step back and ask you, what was the motivation behind founding TradeStream, and how did it all happen?
Look, to be honest, for those of us who love this subject, we are really passionate about trade. We've grown up in the trade world. There's a saying, you can take the boy out of the village, but you can't take the village out of the boy. So we all come from the trade world, and it's something that just gets us excited. And I think that's common that you find among all trade professionals. You say the word trade and suddenly you see the eyes lighting up, and the excitement sort of shared from one person to the other. The same excitement that we have for the trade industry also takes us to the realization that trade was living in a time warp of its own. It was anachronistic because the world had moved over. If you look at the retail industry, when we were kids, we used to go into a branch and ask for money, and then you had credit cards coming out and you had ATMs coming out. The retail industry got digitized. For those of us who grew up in India and in other parts of the world, shares used to be held as physical shares. And they basically got dematerialized to the extent that they are in some demat account somewhere and nobody holds shares anymore. Loans and securities industry the securitization industry went through that. Payments used to make payments through checks and wait for days. Now it's instantaneous, within seconds, and now they're beating each other to get to nanoseconds of the money received on the other side. So that's how the payments industry has gone. When all of these, the aviation sector, I mean, when I started my business travel, there used to be a folder of flight tickets. You used to get 3 tickets in a folder, and you had to give one to the counter, one to the whatever, and then you got onto the plane. Today, you go with your smartphone, swipe, and you're in, right? So that dematerialization or paper being sucked out or automation, whatever you might call it, has happened in those industries, which are as profound as trade in itself. So trade was possibly the last remaining bastion, if you will, in the banking sector, which had been left in the boondocks. These guys are very complex, it's very different. Leave them to be what they're doing, and it will manage on its own. But that was wrong, because it had to catch up at some stage. You can't have two parts of your life wherein individually you're dealing with smartphones, but then you go and start stamping documents and physical documents being couriered, etc., which is where the trade world was. So for those of us who are passionate, we felt that, look, for years you heard in banking, Silicon Valley is coming, Silicon Valley is coming. We felt like, we were just like sitting ducks and Silicon Valley will come and change our lives, and then we don't know what's going to happen on the other side. And the realization was that trade is a specialist field. There is a lot of knowledge, acumen that one, develops over years. And if that's going to happen, somebody has to take the leap onto the other side. If you don't understand technology, you bring the trade acumen. If you have the technology acumen, you understand trade. So somebody has to take the leap. So the belief was that we could fundamentally start reimagining trade as an industry, as a as a checking process which had not existed in the past. Believe me, it was just a pure hypothesis. But to the stage that we've got to now, about 7 or 8 years, by dint of effort, by hard work, by not taking no for an answer, not taking defeat as an answer, and you know how things can go wrong. I mean, there are 100 million ways and things don't go right to your script. I think it's got to us to the stage wherein things don't only work, but they work much, much better than we had envisaged. So that was the genesis to making a difference to the trade industry, to elevating the role of trade in the banking and the world industry. And I think in some form, we feel very gratified and humbled by the fact that it's starting to bear fruits, if you will.
Fantastic. The journey has been quite exciting, and we all have been witnessing it. I'm happy with what you've achieved, Samir, and I'm sure you have your sights set for more and more. How do you see in all this, when we're talking about technology at that length and the landscape changing, what challenges do you think the banks and the corporates face in the traditional trade today, and more specifically with the compliance and the risk process side of things? I'm sure that's something a large part of our audience also are, somewhere on the daily basis, everyone gets to hear these words. What's your take on it?
So trade is still, I mean, we've made progress as in the industry made progress in the last 6, 7 years, but the lifespan of an individual is much, much shorter than the lifespan of an industry. And if you're able to witness and contribute to a change in our lifespan, I think it's a great thing. But the trade industry still, despite all the efforts that we put all together, is still broken. It's still not flowing. It's still not frictionless, if you will. If you look at the connectivity between the banks and the corporates, there is no single sort of ability for the banks and corporates to seamlessly integrate and talk to each other across the world. Logistics, I think the reliance on couriers is also still very high. The reliance on paper is very high. The dependence on individuals, I think when you get into the emerging markets, dependence on individuals, somebody who's been there for 25, 30 years, and as he walks out or she walks out, that knowledge walks out of the door. There is no institutionalized solution per se that can solve that. If you look at the turnaround times, trade is not STP by any stretch of imagination. 5 days, 10 days, 15 days. We've heard stories of a month for transactions to be processed, a month. So while everybody would like to talk on, as you said, those hallowed dices, saying that we can do it in 5 minutes or 10 minutes or 30 minutes. The truth is that even a day today in a lot of institutions is a victory. So to be able to crash it down onto the platform and bring it between 45 minutes and then 30 minutes and then 20 minutes, every single minute has a importance to it, and bring it down to STP. That's our dream. That's the, if you ask me, perspective, where do we want to hopefully get to, is basically make it STP like cash management. The trade that we dream of or we think of is basically where it's preordained. It's pre-trained. So the system is aware what you want rather than you telling. It's not reactive, it's proactive. It's tech-enabled ecosystem. So in one fell swoop, you can connect across all the other functionalities, whether it be KYC or it be credit or it be funding or it be FX. You can connect to the bank in various ways in a fell swoop. You got knowledge which is learning all the time. So you don't have this knowledge waiting because somebody's walked out of the door. And then humans can actually, the repetitive stuff, if the system can take over. I think in some form it's also humbling that the intellect that we as humans have It's being used for lower order stuff, repetitive stuff, which does not, it insults our intelligence, if you will, as human beings. In some form, you can start releasing it for more creative, more cognitive, more, conceptualization stuff, which at the moment in the industry is not being done. These issues that you talk about, compliance, the issues that you talk about, AML, etc., all of these to a large extent can be automated as long as the data is on the system and it's free flowing. And I think that friction to free flow of data between various constituencies to be able to get the right answer is what we are solving for.
No, you picked up the word data, and I can tell you, again, I have this now 4 years. I picked up this habit of going back to 360 TF. What we've been doing in some form or the other. We've been witness to this, Samir, and I can share this example. We get a lot of data on our platform, and the moment you start kind of breaking it up into information, and we've now started sharing it with our banking partners from multiple fronts, the responses are very, very, very different, and that makes me believe and think that this was not available all this while. Well, it's so interesting that these are the banks who are doing the transactions, but they don't have this information. So this is again the seamless flow of data and information is something that will further. And I have been saying this for a while. All the AML challenges are a larger aspect of lack of visibility. The moment we have end-to-end visibility of things, we are able to address KYC concerns in a far better way.
That is correct. And in some form, Vikram, KYC is not just know your customer at inception, because it is that constant refreshing of the data which sits within the bank or the institution, whether it be on the FX side, on the lending side, or the trade side, on the cash side, because there are various moments of truth where you're interacting with the client and refreshing your knowledge, appending your knowledge about the customer. So KYC does not just stop in filling a form and saying as to who are the owners and what's the profiling of the customer.
Absolutely.
It's
a continuous
live
process.
Correct. And that's where data comes in, because you've got the data in various elements of the bank. If you start knitting it together, KYC becomes a live journey. It becomes a live document, which takes you so much further than what you're doing today.
Correct. So we have started calling it internally a dynamic KYC framework, because we want to know what's happening with the customer on a regular basis, at least what's flowing into our system. To that extent,
Yes.
we should be able to capture. Now, with this, when you look at the industry, any specific examples where the digitization of the trade finance front has made a significant impact both on banks and corporates? Pick up any.
Again, that's a conversation for a whole day. But
I know.
let me just take it very, very quickly. So first and foremost, to take a life example from my life. So when I was running the business for Citi, one of the biggest, and I think it's for any bank around the world, there were three fundamental problems that were constantly faced. The first one was you could not increase your revenues without increasing your FTE. There was a direct correlation between FTE and revenues. Second, you could only process a certain amount of the transactions. Therefore, if you wanted to increase your wallet, you want to increase your revenues, you had to go and get approvals for more people. Third was you were always at the risk of from a risk mitigation point of view, there were no industrial solutions, and therefore you were always at the mercy of somebody remembering to do the right thing at the right time. And if he or she missed it, all bets were off. Either regulatorily or from a credit risk, you were always exposed. And that basically made it very difficult to grow a business. Yeah. So if you were to look at it, how does technology enable us to solve for that? The first problem about revenue increase. Revenue increase with technology, which can allow you to process much faster, much more, in a much more risk-averse manner, actually helps you to throw the net wider. It moves you from elephant hunting to what's called rabbit hunting, because in the past, because there was a paucity of processing capacity, would only focus on the big ticket transactions. So the SME business or the smaller ticket transactions couldn't be processed because they took the same time but made lesser revenues. So invariably you focused on the big ticket transactions. So that mentality shifts because now you can actually start throwing the net wider. Second, to one of the use cases that we're working with several banks around the world now is this will blow you, Vikram. It blew me when I first saw the stats. Of 100 LCs that were being advised, roughly 50 to 55 were coming back for negotiation. So 45% leakage, because advising versus negotiation, you know where the revenues are, right? So if 45% of the LCs are not coming back to your negotiation, you can imagine what's happening. And then of the 55 that came to you, only 5 came for FX. So 95% FX leakage for the same bank. So if now, to the point that you were earlier talking about, data is captured at source, you can actually instantaneously start relating it to the FX test, to the funding sort of proposition within the bank, and start making inroads into that entire chain so that you can augment and cross-sell, which is what most banks would ideally want, from advising to negotiation to discounting to FX. And suddenly your $100 return on a transaction for the same risk, potentially what you're taking, could become $10,000, $20,000, $30,000. So the upside of technology just on the revenue side in itself is mind blowing. Then, sorry.
No, I couldn't resist my urge to speak. That's something that I've been seeing, Samir, for a reasonably long time, and I'm so happy that you picked up this and picked it up at a global level from a solutioning perspective. And this is so unfortunate. See, and I credit this to my boss, my first trade finance boss. The way we were taught trade was start with LC advising, start with the flow initiation of that flow is that. Then you track document presentation and discounting, negotiation, everything attached to it. We did a small study in India market. The numbers are quite starking. The advising to negotiation percentage is less than 20. Okay. And this is, when we go back to our banking friends and say, look, we have a product, by the way, on this side. We help banks on this front. But I'm so happy that you're bringing this up as a pointer, and it directly correlates with the FX piece as well. I'm 100% with you.
Yeah, so it's just in those buckets, if you were to take it FX, funding, negotiation, etc., you dramatically change your business landscape.
Yeah.
Then you look at it from a risk mitigation point of view. Vikram, I would tend to tell you that earlier it used to be about 9 out of 10 banks used to come to us for cost efficiencies. Now 9 out of 10 banks come for risk mitigation. Because the ability for us to be able to seamlessly connect systems around and be able to give you a solution on your fingertips is a very big enabler for risk mitigation. Whether it be vessel or voyage or price checks or EML, to your earlier point, these are profound for trade. I mean, if you were to, query on and check how much in fines banks pay or how many licenses get lost in a certain year because the operating person on the floor did not have the risk mitigation ability on the shop floor is not insubstantive. So that in itself becomes a huge enabler of or a case study, if you will. Trade per se, if you were to ask me, is this commoditized? As an industry, we are very, very commoditized. So if you can actually get to be able to enable the customer, ultimately it's the corporate who wins because the corporate gets funding, the corporate gets FX, the corporate gets all these capabilities in one fell swoop. They're able to reduce their DSOs, they're able to reduce their costs. Ultimately, it's the end user, the corporate, who benefits from all of this. So, we can talk about for days and days, but ultimately it is the corporate who wins in all of this. Hello? Can you hear me?
I think we just lost Vikram, but this is some very interesting, and I'm just coming to an interesting this thing that how you see, it's very interesting, and I think we discussed when we met over. I'm just switching the gears here on the capital raise or getting an investor on board, where a lot of other technology firm and fintech have taken a capital from the banks, where you've taken a route of going to a private equity firm and venture fund like Etisalat and Company versus going on the bank side from equity raise perspective. What was your theory, not from a trade stream perspective, but we have, of course, an audience from 13 countries. What's your take on taking capital versus a bank or versus a family office or a VC fund?
So, Pankaj, in many ways, is driven by who your partner is. Do they share the same vision, the same dream of where you can get to? Do they have the same insights? And ultimately, your partner, it's a case of complementarity, right? You bring certain skills, but you need other skills which they bring probably which you do not have. And ultimately, it's about how does one plus one become more than two. So for us, this entire search about a partner was all about who do we get in with us on the table to discuss the problems on a daily basis, who has the same ethos, the same passion, the same vision, the same view, and who can come and complement and teach us things that we don't know. We are not we're not naive enough to think that we know everything. In fact, it's we learn as together, and in that sense, the partners that we have today in the form of EN Ventures and Etisalat and Pivot, these are two formidable partners. What EN has done in the industry, I mean, you stay in Dubai and it is mind blowing the way they powerfully use technology to provide a seamless service to people. That is in some way a dream state for trade. What they've done with technology and with the telephony. Same with Pivot. Pivot has been investing for years in what they saw. First they take a view on an industry that this is an industry which is ripe for disruption. This is an industry which is ripe for change. And then they unleash all their powers, all their connectivity, all their business acumen to make sure that the business has the support to be able to make it happen. And to be honest, we are completely in bed. So on a daily basis, we have several conversations about how do we do this? What do we do? One of my business leaders earlier, when I was in the banking sector, said that there is no dearth, there is no upside to how much you can achieve if your ego does not stand in your way. If you're not precious about owning what is happening, but being a partner and a contributor to the change process. So as long as your partner is in the same mindset as you, there is no dearth of what you can achieve. And I think we saw that in the two partners that we had. There was, again, to be honest, it was humbling to see so much of reaction and such strong reaction from people around the world to invest in TradeStream. But in these two, we saw the echo of our sort of culture and our ethos, if you will, and our vision of trade, if you will.
Fantastic. Vikram, over to you. Yeah. I think is seems to be frozen. So, Sam, the solution which you, as a trade team, which we offer, I think one is, I think you're working with a lot of banks globally, closely for automating how the bank process a trade finance transaction. But, of course, the partnership of now with 360 TV is also the vision that how we can help automate the process and improve the turnaround time with the corporate, right? And we, of course, today on the call, along with the bank, we have a number of corporates from UAE and other and India. How you see a corporate which is either opening LC or receiving LC get benefited from TradeStream?
So first and foremost, my deepest and heartiest congratulations to what you guys have achieved at 360 TV. I mean, we've all as an industry seen as to how you've grown from a concept to a reality and a visible, vibrant brand. The fact that you've got a penetration level, I mean, it's like inspirational in some forms in the way how you've succeeded in doing and taking this motion by dint of hard work, where you've taken it to. I personally believe that the trade world is a very, very, very large fabric for all of us to work, and there's space for everybody. And I don't think it is conceivable for one entity or one individual to be able to do justice to all of it. And I personally believe that working together as partners, the way we are working now, we would be able to solve a number of problems together in a connected ecosystem, if you will. So the way you engage with corporates, the way you engage and solve their problems, the way you are able to go and understand their needs, we are looking at it from a banking perspective as TradeStream. We're basically trying to digitize the banking space and now working closely with you, your need identification and our fulfillment of that need together. I think it sits together as a complement. It's extremely synergistic. I mean, at the end of the day, Pankaj, and these are stats from one reads in the press. There's almost $2.5 trillion of unmet trade demand. That's not a small number. That's a massive number. And you can imagine the amount of opportunity. We just started, if you will, in that space. So for you are amazing hunters, you're amazing identifiers, you're amazingly with the corporates. And us coming in with the technology, sitting aside with you and being able to enable it, I'm sure in not the too distant future, we would have a solution which covers from the banks to the corporates and allows them to meet their confirmation, their funding, their FX needs with the bank. So it's a very, very exciting proposition together.
Thanks, Sam. It's quite nice to hear it from you. I hope I'm audible. Yeah. That's where partnership matters. Uh, Technology can play surprises at times, and Pankaj chipping in at the right time. Thanks, Pankaj. um, this, no chat in today's world is complete without asking a view on. While you did mention, but I'm just kind of making it a little more pertinent as a question. How do you see AI in this entire space today?
It's a great
Any
question.
any
And
any specific use case that you have been able to kind of pinpoint as, and I'm kind of blocking you in trade only.
Vikram, this is a question that comes up almost every single day from the people we are talking to. And again, AI is a catch-all phrase for a very, very, very large subject. AI, ML, it just gets thrown in, and it's like a catch-all phrase. But if you were to peel the onion and start looking at the devil in the detail, AI goes into various elements, right? You've got machine learning, you've got supervised learning, you've got unsupervised learning, you've got contextual learning, you've got cognitive learning, and then there are tools below in the form of Markov chains and graphing. And I mean, there's just so much. All of it gets put together into one catch-all thing, AI ML. If you were to ask me how indelible is AI and ML, enormously. But it is almost like asking how important is multiplication in maths. It's a tool. It allows you to achieve some things, but will it allow you to apply everything? No, because you got subtraction and division and addition as well. So you have to use the tool for what it is worth and what it can get you depending upon the underlying use case. In the trade process, right from digitization and awareness of the document, because we know one of the fundamental problems in trade is that it is non-standardized, it's unstructured, and that's where the human brain plays a part, right? Through learning over the years, you know where to look in what document, what data, etc. So to be able to get the system to do it, there's a huge element of AI, ML that comes in just in that space. Then you got the more fundamental and more challenging and more exciting part about the text itself, reading a text and understanding what that text means. 3x3 bill of lading going from port A to port B can be written in 50 different ways. The way you act on it, the human brain has been trained as to how to do it. The system is not. So to be able to use AI, machine learning, and even Gen AI, to instead of filling the blanks, actually predict and say, this is what it is, and if it meets and it is what it is, then bang, we know what needs to be done. So the amount of experimentation that goes on the shop floor every single day, and I would love to tell you that we succeed 9 out of 10 times. In fact, we fail 9 out of 10 times. Because when you are in that mode of experimentation on a daily basis, you put in a hypothesis, it doesn't work, then you need to go back, recheck your hypothesis or the tools that you used, and all these tools across AI, ML, LLM are nothing but tools, and they don't all work for all use cases. But from a trade perspective, between AI, ML, and all these sort of experimentations that are going on in the industry at the moment, I am super excited. I mean, there's this saying that the future is faster than you know, and that's absolutely true for trade. The future is faster than we know. The dream about frictionless trade, to a large extent, AI, ML, and these tools are helping us achieve. So the next few years are going to be super, super exciting.
I'm completely with you on that note, Amir. The next few years are going to be super exciting, and I'm sure we all are going to witness the excitement together in this journey. Thanks for being, once again, thanks for being on the call and taking up those questions and enlightening all of us with your experience and knowledge. It was wonderful, Samir, having you on the call and talk about your journey, your experience, and the way you see the market. Right. Um, with this,
Uh,
I'll leave it open. Yeah, Samir, you're saying
no,
something.
no, Vikram, I wanted to
want,
thank you. Sorry, go ahead,
sorry.
Pankaj.
So, Sam, that I've got this interesting thing in the chat box, which we of course discuss about sharing a specific use case of the how we're using technology in TradeStream in doc checking, in the sense that what otherwise would have happening in a bank for document checking for letter of credit, and what it changes after a technology being given by TradeStream, and what are the, if you can share the experience of the use case in terms of how you improve the, reduce the discrepancies and, turnaround time, and it would be great.
Sure. So, Pankaj, in fact, there are several use cases, but let me fundamentally take a step back and share as to what do we do. We digitize, we check, and we check both for trade and compliance. Fundamentally, if you were to take one sentence, that's what's being done. But the entire effort, simply put, of that one sentence is to be able to bring it down from 5 days to 5 minutes. And that's where the science and the art of all of it is. Now, if you can fundamentally do it in 5 minutes as opposed to 5 days, you know what it means for downstream payments, FX, funding, etc. From a trade floor point of view, yes, all of the buckets that you just mentioned, because we track our KPIs on a daily basis in that same measure, i.e., is the system detecting what the human missed? Is the system detecting anything that was a risk that the human missed so that it can flag it? And I can tell you, we must have done probably close to about 200 different POCs, pilots, mandates, etc. And across those, the system at this stage, not in its inception 5 years ago, but today, kid you not, finds between 5 to 10 times more tenable discrepancies that the human has missed. So that's the first use case, if you will, from a risk mitigation point of view. The second is compliance. And we all know the importance of compliance in the regulatory world. You don't get dinged for what you do. You get dinged for the last 1% that you did not do. And when you get dinged, the fine that you get put or the penalty that you get put is not commensurate with the error that was made. It's seen as a systemic, and that is true. It should be. The fact of the matter is, one can sleep so much better knowing that it's not just an individual, but hundreds of different systems connected in a manner contributing to that compliance check. It's a huge comfort on the operating floor or as a business leader that when you go to sleep, you have the best possible solution on compliance from your perspective. When you look at the downstream benefits, Pankaj, you talked about taking data. So one of the bankers told us when we met them, my fundamental problem with trade was always paper, and you can't connect into paper. What do you do with that? When you start taking the data out, it starts becoming oil. It becomes the downstream benefits of what we discussed on the call, FX, or connecting it into the compliance systems or the credit systems or the accounting systems is immense. We actually are seeing, Pankaj, on a daily basis now, the flow from the corporate to the bank. Corporate ERP spewing it into TradeStream, connecting into the bank's backend, connecting into the bank's backend trade system, onto the credit system and disbursement. So the entire highway, the digital highway between the corporate's backend to the bank's backend is becoming a reality. So, I mean, I can keep on talking for hours about the use cases. My apologies.
No, this is interesting, but just in a simple layman, in the sense of a specific term or a specific document. Let's say if I was submitted the document for the negotiation, okay, with all of bill of lading and the LC and the all packing document and all checklist and all. I'm just giving an example for the document negotiation in a traditional world versus now where you're using a technology. What of those things got picked up by system which otherwise would have missed by human being? Maybe three, four items if you can just share, which could. So we talked about, okay, 5 days to 5 minutes, but what is that which otherwise is picked up by system, which the trade operation guy move on that and it expedite the negotiation.
So I think you are as strong as your weakest link. And in trade, we've grown up. I started my career on the trade floor checking documents. So from that perspective, and all of us, I mean, we got 75 CDCS trained people in trade stream at the moment. So the daily emphasis is basically to make sure that every single element of a transaction gets gleaned out, gets taken out. So in an invoice, there are probably 150 different elements. Who's the buyer, who's the seller, what's the country, what's the location, what's the net weight, gross weight, this, that, goods, everything gets taken out. Similarly, in a bill of lading, similarly in a packing list, and so on and so forth. There are probably hundreds of documents at the moment that we understand as a system automatically that this is an invoice, this is a packing list, this is a bill of lading. We understand it clearly. So even without the user having to tell us, we understand the document. Each and every data element gets labeled and determined. Once you are in that position to be able to do that, you are in a very powerful position, because if you do that and you got all the data, then all the checks in the background can be run, whether it be consistency checks, trade checks, compliance checks, you name the check can be conducted on the system. And as if the system has the automated ability to learn thereafter, none of these checks go wasted. They actually keep on appending the check library and the ability to be able to check, so that as an industry on a network basis, we can append to each other's knowledge. So from the invoice, you pick up the buyer's name, the buyer is there, who's the the shipper on the bill of lading, who's basically the insured party under the insurance document, and you start checking, are they the same transaction, are they the same person, etc. So you are so much more aware if you start cross connecting the dots between the documents once you got the data. And the power of that is that versus a human being who, early in the morning you're fresh, after lunch you feel a little drowsy, or my wife has shouted at me today, so in the afternoon when I'm checking my documents, I know what my mood is going to be, or I'm not feeling well today because I had a little more beer last night. All of those sort of peculiarities, if you will, get taken out of the process because there is a consistent framework, standardized approach that the system is checking on. So, I mean, there are n number of different use cases that you can talk about from a consistency point of view that you get checked on. Does that answer your question, Pankaj?
Yeah, I think
You
this
know,
is useful. This is
I'm sure
useful.
this is answering the questions of many of the trade professionals who are there on the call today, or attending both on Zoom and on LinkedIn Live. Um, we have some questions which have come over to us from the participants, Ashna. Akshita, over to you.
Thank you to our insightful speakers for sharing their expertise and wisdom with us. So, one of the questions we have is, how do you oversee the role of LCs evolving in global trade over the next decade?
So, for those of us in the trade world, we've heard the demise of LCs ever since 1990s. LCs are going, LCs are going, LCs are going. But lo and behold, they seem to be still there and seem to be going strong. I think it's got to do with some form, if you take a step back beyond trade, into the fragmented and polarized nature of the world that we deal in. So, on one hand, you got a geopolitical fabric which is at odds with each other. I mean, I don't need to spell about what's happening globally. You got this regulatory nationalism where, countries for genuine reasons, I guess, want to keep themselves secured. There are liquidity barriers that have been created between countries. And there is an element of distrust, mistrust, whatever you might call, that seems to be up there in the air. Now, in that world, an LC per se is the perfect recipe which helps to be able to solve it. So if I were to be a soothsayer, I would not call upon the demise of LCs for some time from now. And then fundamentally, if you look at some of the emerging markets, an LC for traditional reasons has been a source of funding. So when you get an LC, a bank feels comfortable that it's a genuine case. And instead of it just being your distrust with the buyer, it actually becomes a case for you to get packing credit or pre-shipment finance again. So it's a funding tool. So for all those reasons, I don't see LCs per se going away.
Yeah, thank you, Sami. So the next participant says, adoption of AI technology in trade finance remains a long and challenging goal for emerging markets, with banks taking baby steps. How are fintech companies like TradeStream playing a crucial role in driving the adoption of AI and blockchain technologies in these regions?
So I think both Pankaj and Vikram would sort of ascribe to this notion. When I was in the bank, there were 100 different things that we were forced to do on a daily basis and we were expected to do on a daily basis. For the one big difference that probably fintechs bring to the table is they have only one reason, and that reason is, in our case, for example, it's checking. In case of Pankaj and in case of Vikram, is basically solving the problems of the corporate. And daily basis, when we get up from morning to evening, we are focused on that one problem to solve it. And I think nothing gets, I mean, Rome was not built in a day. It takes a lot of effort, but it also takes focus to be able to solve it. And I think that's one place where decision making is faster, where you're working towards the same concerted goal, where we are passionate about solving one problem on a world-class basis. That probably fintechs bring to the table. And it is not either or. It's a world where we all need to partner, and the number of partnerships that we have with banks today is overwhelming, because banks bring a huge amount of credibility, flows, customer connectivity, and knowledge to the table for us to co-create. So we see this as co-creation opportunities where the entire industry is moving forward.
Thank you. The next question is, what are your thoughts on automating document creation to remove the ambiguity of discrepancies and make trade smoother?
Well, it's all of the last 50 minutes. I mean, to be honest, it's basically everything that you just said, right? You dream of a world where trade is a lot more standardized, it's more structured. You dream of a world where you can actually on tap on a frictionless basis, you can solve for discrepancies. Think about it. The corporate sends its documents to the bank checks it, finds discrepancies, sends the documents back to the corporate, and that pinging and toing and froing continues. That's not adding value to anybody's lives. I mean, there are much better ways of being able to solve it. So if you can add source, solve the problem, comes to the bank, it's already solved, checks there between the buyer's bank and the seller's bank. If there's connectivity, that makes it almost like a single review. So you can ease the pain across the process in so many ways that it's not funny. And the good thing is that as opposed to before COVID, if one were to say, this seemed like a dream. Really, with the banks that we are working with and talking with and the transformations that we're achieving with them, this is no longer a dream. It's a question of when. And when in the next few years. It's not a question of for the foreseeable or unforeseeable future. It's happening now as we speak.
Last but not the least question of the day, will smart contracts and blockchain-based digital contracts replace LCs in upcoming time?
That's one place, to be candid, that we've seen slow attraction, I guess, because a lot of these technologies, and I think it's unfair to the technology per se, to expect too much of the technology on day one. So blockchain was probably, in my humble opinion, my personal opinion, too much was pinned on blockchain to solve the problems of trade too soon. You need to give time. Any technology needs time to be able to go develop, evolve over time before it starts solving the problem. So in some form, people got excited and then diffused about blockchain. I think there will be problem cases in trade that are being solved or looking to be solved. If you ask me just tomorrow morning, will smart contracts take over? No. between AI, ML, and LLM, what are we more focused on? AI, ML, and LLM as opposed to blockchain, because I think it's further apart at the moment from a future point of view that these would start contributing, in my humble opinion. Um, it's a technology which is probably slightly slower in adoption and solving for the problems than the others.
Thank you, Sameer, for answering these questions. Thank you, everyone who joined us for this fireside chat. We appreciate your time and thoughtful contributions. Stay tuned as we unfold the next topic of the fifth episode of our Business Unplugged series.
Thank you so much, Akshita. Thank you so much for inviting me, and wish you at 360 TF all the very best. You guys are doing an amazing stuff.
I mean, thanks for joining us, and we look forward for our engagement. That's between TradeStream and 360TF, going live and hitting the market jointly on some of the exciting areas, be it on the banking side or the corporate side. And it was wonderful having you on this call, and being with you is always a pleasure. Talking to you is always a pleasure. So thanks for coming in.
Same here. Thank you so much.
Thanks, Sam. Thank you. See you soon.
Bye-bye.
Thanks.
Thank you.
Take care. Bye.
Thank you, everyone, for joining.